My name is Chacha Nyamhanga. I work for KCB in the money market department. So I'm here today to share with you some investments in money markets and also the risks involved and how you can manage some of these risks. So to start with, I'll give an introduction on the money market. Money market, as you know, is a market for short-term investments which have a maturity of 1 up to 1 year. And some of these investments, they comprise call and money market deposits, treasury bills, commercial papers. These are short-term instruments. And the money market instruments, they are very liquid. That means you can turn them into cash at a short notice. And due to their short-term nature, the risk involved is negligible. So some of the money market investment opportunities which we have, and some of all these we offer them in KCB. The first one is called deposit, and this is a deposit which you make with a bank as an investor, and it earns you interest. Now, for call deposit, does not have a specific maturity date. It's very flexible. You can call it at short notice whenever you need it. Now, we offer this product in local currencies and also the major foreign currencies. Closely related to that is the term deposits, which is popularly known as the fixed deposits. Now, this one, it has a fixed term of maturity. At the time of opening this account, this investment account, you agree on the fixed term, and it's payable. You will pay competitive market interest rates. Also, it can be opened in both local and other currencies. Now, interest on both call and term deposits, they accrue daily and applied on maturity date. For call, it's applied on the date the deposit is called back, and for term deposits, it's applied on the maturity date. Okay. Now, the other money market products, which is an investment opportunity, is treasury bills and treasury bonds. Treasury bills are short-term investments issued by the government, and bonds are long-term investments. They are both issued by the government. Now, we as a bank participate in the primary auctions in our own account, and we also participate on behalf of clients, investment groups like you, so we can be able to buy and sell on your behalf on these instruments. And also, closely connected to treasury bills and bonds investment, once they are issued in the primary market, they are listed in the stock exchange. So as an investor, you can access this investment through fixed income trading, and we actively participate in the secondary market, so we can be able to offer you prices, as we are one of the top players in the secondary market for bonds. These are not listed at the stock exchange. Now, I'll now move to talk briefly on some of the investment risks, which you as investment groups need to be aware as you're doing your investment and how you're going to manage it. As risks, as you all know, they go hand in hand with returns, and typically, the higher the risk, the higher the expected return. In fact, it's said that no risk, no return. So we have to take this risk. But the most important thing is that we should take calculated risk to note the recurrent risk, which implies that if you take recurrent risk, you are able to roll your returns or not receiving the return at all from such investments. So risks, they are there, so we have to be aware of them and how to manage them. So the first one is called default risk, and this is one of the most frightening investment risks. And this is a situation where you don't get your interest or your principal on both of them. So that's what is called default risk. The next one is business risks. As investment groups, you invest in various companies, and these companies in shares and stock of various companies, and these companies could be affected by various market conditions. So if the companies where you have invested is not performing well, then the value of your investment is found to be affected. So this is what we call the business risk. The risk involved in investment is what we call liquidity risk. Liquidity is how quickly you can turn your investment into cash. An asset is said to be liquid if it can be converted at short notice into cash. So then a liquidity risk is a possibility of the investor not being able to realize cash from the investment when you require. Liquidity risk refers to the possibility of you as an investor being able to realize the value of your investment when you need it. This may happen because if the security cannot be sold in the market, there is no demand for it, or there's a premature termination of the securities, or the resultant loss from realizing that security is very high. So you run a liquidity risk. And some of the liquid instruments are current accounts, savings accounts in banks, and some of the actively traded shares and securities, because if they're actively traded, then you can realize your security on short notice. Now, the other risk in investment is the inflation. Inflation here is when prices go up, the purchasing power of your money is affected. So this, as you've seen, the recent rise in prices of oil and foodstuff has also been, is one of the major concerns in the global economy, including Kenya. So that the value of the money in your pocket becomes smaller and smaller. Next is the interest rate. And this is, interest rates, as you know, is the cost of money. And interest rates, it affects fixed income securities and the risk of change in the interest rates in the market. So, for example, in a security market, if you buy a security today, say like a bond, a 3-year bond, say at 9% today, if 3 months or 1 year down the line, the market moves up, then it means the securities which will be issued at that time will be issued at the current market prices. So which means the value of your security, which is at a lower yield, will be lower. Next is the political risk, and this is, we are saying the government, as you know, has extraordinary powers to change the legislation, and this affects the businesses, which is also directly related to the business risk. So, or a government may come in, change some policies or some political ideologies, and in the process will affect the performance of a number of these businesses where you have been invested. And also, as you realize, this is also known in this country, markets become jittery whenever there is an election around the corner, because the investors have viewed that the political risk is very high, so the market should adapt and wait and see situation. Now, after taking you through those various key risks, those are not the only risks involved in investment. Those are some of the key risks. So briefly, I will share with you on how you can manage some of these risks. As you know, you cannot do without risk, because no risk, no return. So we have to know how to manage some of these risks. Now, one thing we need to know is that not all these, the 6+ risks which I have mentioned, will be present at any point in time. And secondly, some of these risks are interlinked. So you may find, say for example, a company which has experience in business risk could also be at the same time having a liquidity risk. So you may find some of these risks are related. So what is important in managing some of these risks is to be aware of the existence of each of these risks, have the knowledge, so that you can be able to take in investment opportunities. So a note is that remember there's always some risk in every investment. No risk, no option, no gain again. So what is important is to understand the nature and the degree of the risk present in that particular case, and whether you can afford to carry out that risk, or you are willing to take that risk, because you may not be able to eliminate it. Now you need successful skill in managing the investment. It lies in balancing the risk versus return. So if the risk is very high, then the expected return should also be equally high. Now once you understand the risk involved in various investment options, then you can do a select of the investment, and that is the way you are going to grow your wealth. So they shared here that these risks are there. You need to be aware and also manage it, and how much manage you can take. So in KCB, we, as it is, the money market investment product I listed, we all offer them in KCB, and we have some of the benefits if you invest with us, that we do quality services, and also that being the key players in the market, we keep abreast of what is happening. We prepare a yield curve which is used by most of players in the market, and also give an update on market. As you know that to be a good investor, you have to have information, and correct information, and timely. So we have information which can share with you people, and as you make your investment. And also on the investment in securities, being an active player, will be able to assist you as we partner together in this investment. So thank you for listening to me. So I'll close with a quote that says, investigate, then invest. Thank you.